I'm just kind of watching this market action here this morning on a Monday, and the markets, well, they tried to sell off the grains a little bit after the open, but soybeans are regaining their strength again. Corn is just kind of hanging in there, I guess you could say. Let's take a look at our current trade. Let's go to corn first, and our quotes are provided by Bar Chart. Just a reminder, we did have 269,240 tons of corn sold to unknown destinations this morning. It helped a little bit. We have March corn trading 3 cents higher. We're at 608 3/4. I don't know if it helped it any more than what the overnight trade was, because the corn market was higher then too. We have the May contract up 3.5 cents. You will note December of 22 corn is just 1.5 pennies higher at 5.55. So the nearbys are gaining on that. Now, if you switch over to soybeans, these quotes provided by Bar Chart here have January up 19 3/4, March up 20 1/4, 13.61, within 1.5 pennies of our high of the opening trade. So a lot of strength in the soybean trade here today. Interesting. On the wheat market in Chicago, you have the March unchanged at 8.14 3/4, and you have May just up 1/4 cent. Now, that July contract for 2022, it's gaining 2 cents right now. That could be noteworthy. If you look at Kansas City wheat, March is down 1/4 cent at 8.61 1/4, but if you go to July, it's up 3/4 cent at 8.47 1/4. So kind of the same story there, a little spread activity. On the spring wheat trade in Minneapolis, March is down 7 at 10.25 1/2. July is down 4 3/4 at 10.02 3/4. Well, I want to bring in Chris Winward of Swift Trading. Now, Swift Trading has offices in Nashville. Chris happens to be working at Delray Beach, Florida, and he joins us right now on the phone. Well, Chris, good to visit with you again. It's been a little while. Thanks for being a part of the show here today on a Monday. Final trading week of the year. How much do you think that'll affect our grain trade?
Well, this tends to be a slow week. I heard that there was 2,000 flights canceled today, and I think typically these markets are pretty thin this time of year. But with that psychological $6 level, us hanging above that in March corn here, and some weather concerns in South America, and these flash sales keep coming in, I think all signs are pointing higher here.
All righty. The weather in South America has garnered a lot of attention here this morning. From your sources, does it look like there's any chance of rain moving into key growing areas in South America over the next 10 days or not?
Slim. So I looked at the 5 to 7, and it was showing that that there was not. So, anything can happen this time of year, but that is the story this week.
Now, given the fact that we have a higher corn and especially a soybean trade here today, do you look at that as an opportunity for producers out there across the country that maybe want to do some last-minute marketing at the end of the year here? Do you look at that as a gift marketing opportunity, or are you willing to be more patient?
Well, I think in January there is talk that outside money has an interest on the long side of this, but $6 corn is that's not something we thought that we would have a year ago.
And 13.61 on the March soybeans right now. That's a far cry from where we were back in about the first part of December there. So I just wondered how aggressive guys are out there in the country, and gals, as far as marketing their new crop they just put in the bin.
So there's different ways you can do it. You can either just lay it off here, or you can sell your crop and then buy calls. There's all different strategies to help average into these moves.
Have you had producers out there be pretty aggressive about 2022, or are you willing to let the dust settle a little bit and get closer to spring?
A lot of people want to let this dust settle and see what spring brings, but I'm always a fan of the averages. If you can average into these moves, it takes some of the guesswork out.
Interesting. All right. Well, we'll take a break right here, and Chris will be back and get everybody updated on our livestock trade when we return after this. All right. Well, we're back with Chris Winward, and we're going to take a look at our livestock trade now. We'll go first to the live cattle trade. Remember, we had the big gains last Thursday when we went home for the extended holiday break. And on live cattle right now, it's just a little bit easier as we begin this trading week. February is down 20 cents. We're at 139.42. It's 90 cents off of our earlier high that was established right at about the open. Now, the April contract is down 20 cents as well. We're at 143.72. Let's move on to the feeder cattle market. And on the feeders, you have the March contract now 40 cents lower at 163.35. April down 42 cents at 166.95. Then you get to the lean hogs. Now, the lean hogs were a little weaker on Thursday, and they're a little higher today. You have February up 47 cents at 83.70. April is 92 higher at 87.57. Well, Chris, you had some interesting topics as we were in that short break there a little bit ago. You were talking about the fact that there are a lot of canceled flights around the country. There's a lot of expanded talk about this Omicron variant of the coronavirus, and it's just causing all kinds of ripples throughout the economy out there. And from that standpoint, one has to wonder if that's really going to impact, for example, like the restaurant demand again when it comes to meat trade. What do you think about that?
Depends where you are. Florida is wide open right now, so it's not going to affect much here, but I just spent a couple days in Philadelphia, and it is a whole different story there.
Give me an example.
So less people are willing to go out. So more people wearing masks up there, and restaurants look quiet.
So if that's the case, if the restaurants are closed, people still have to eat. Does it just change their buying habits then? Are they buying a different kind of meat to cook at home or what?
Portions tend to be larger in restaurants. So there probably is, some difference there in the amount. But holiday dinners were, all the buying was probably already done for those by the time this thing really kicked into high gear. But, it's definitely something that is affecting demand.
What about the long-term outlook then? Does that change the way you're perceiving the trends on cattle or hogs as we head into 2022?
I don't think so. I think this is a wave that we will have to get through. I think it'll be short-lived. And, once it slows down a bit, I think people get more confident and start getting out more.
Well, that also would apply when it comes to foreign demand, right? When it comes to beef and pork, do you think that's going to cut our export potential now?
I don't think so, and we've had great exports on the beef side. So, I think that this is a short-term glitch, and everything is still looking good for on that front.
All right, just wanted to take another look at what the Dow is doing right now in these equity markets. They're hanging right in there today, even with the exponential spread of this Omicron variant. The March contract on the Dow futures now 140 points higher this morning. We're now at 35,972. A June futures contract up 142 right now. The dollar index last time we looked was pretty flat on the day, and it's still not doing much of anything. It's just kind of floating there. The March contract up just 75 points. We're at 96.060, so basically about where it was last time we checked. Well, Chris, good to talk with you again. Hope you have a great weekend, and best wishes for a very happy and successful new year, as well as Chris Winward with Swift Trading joining us this morning from Delray Beach, Florida. Oh, to be there, Tammy.